All right, so today we're diving deep into Kontor Space Limited. This one's for all of you out there who are following the co-working space market, and you want to know what Kontor is all about, especially their business model.
Yeah, it's definitely a hot sector right now. And Kontor's got everyone watching. They're publicly listed on the Indian stock market, already in 4 locations in India, and they're not slowing down anytime soon.
Nope, not at all. And we've got some juicy intel to work with today, notes from their recent earnings call. We're going to unpack it all. How they make money, their strategy, and even what risks they might be facing.
Sounds good.
Let's start with the basics. What exactly does Kontor Space Limited do?
Basically, they acquire properties, fix them up all nice and fancy, and then lease them out. The interesting part is they cater to 2 different types of clients. You've got companies looking for those fully managed office spaces, and then you've got, well, I guess everyone else, individuals, small teams, freelancers who need that flexibility of co-working spaces.
So they're covering the whole spectrum. But, in their earnings call, they kept mentioning premium affordable. What exactly does that even mean? It seems a bit contradictory, doesn't it?
Yeah, it's a clever strategy, actually. They're going for those high quality, almost luxurious spaces, but they want to make it more accessible than some of those super high-end competitors out there.
Okay, so they're kind of like democratizing the fancy co-working experience. But let's get down to brass tacks, the money. How does Kontor actually generate revenue?
Well, they've got 2 main revenue streams. With their co-working spaces, it's all about the per-seat fees. You come in, choose your spot, and pay to work in this, trendy collaborative space. And the prices can change quite a bit depending on the location.
Yeah, location, right. So let's say I want a desk in their Thane or Pune co-working spaces. How much should I be prepared to shell out?
Somewhere between $7,000 to $15,000 per seat. But then you've got their Fort location, which is more geared towards bigger clients who want a whole managed office. That's a different game. Monthly fees can go up to about €8 to €9 lakh.
Wow. Okay. So they're really targeting a wide range of budgets and needs. Now, what about their BKC location in Mumbai? That's prime real estate, isn't it? I imagine it costs a pretty penny.
Oh, yeah. BKC is where they get top dollar. Per seat fees can reach $40,000 billion. And from what they said in their earnings call, it seems like this location is a big chunk of their revenue.
Makes sense. Leveraging a high-end spot like BKC to boost those profits. But every business has costs, right? What are some of the major expenses that cut into Kontor's margins?
Well, their biggest expense, as you might guess, is rent. It's a significant chunk, like 40 to 50% of their revenue. And then there's this thing called speculative inventory, which can be a bit tricky.
Speculative inventory. That sounds kind of risky. Can you explain that a bit more?
Yeah, so it's basically when they secure properties and develop spaces before they actually have clients signed up for them. They're betting that the demand will be there. But if it doesn't pan out, their profitability can take a hit.
So they're kind of playing the real estate game. Have they had any issues with this in the past?
Actually, yeah, they mentioned their BKC expansion as an example. It took them a few months to reach full capacity, and that lag time definitely impacted their bottom line.
So are they doing anything differently now to mitigate that risk?
Well, it looks like they're now really emphasizing the idea of anchor clients.
Anchor clients. Those sound important. Can you tell us a little more about them?
Think of those friends who always show up to your parties, the reliable ones. Anchor clients are like that. They commit to taking a large chunk of the space, often like 50% or more, right from the start. It gives Kontor a more stable revenue base and reduces the risk of having all that empty space.
Yeah, that's a smart move, especially when you're entering new markets. It's like having a safety net. But on that note of expansion, how ambitious are Kontor's growth plans?
Super ambitious. They're planning to double their seating capacity every year with a goal of hitting 10,000 seats by 2026.
Whoa, that's a lot of growth. How do they plan to pull that off?
They've got a 2-pronged approach. First, they're looking beyond Maharashtra to other major business hubs like Bangalore, Hyderabad, and the NCR region.
Makes sense, tapping into those booming markets.
Yeah.
But what about their existing locations? Any plans to expand there as well?
Absolutely. They're still actively securing new properties in Mumbai, continuing with that anchor client strategy to minimize risk as they grow.
Okay, so the vision for growth is clear, but expansion needs funding, right? How's Kontor planning to finance all of this?
Right now, they're using a mix of funds from their IPO, what they're earning, and contributions from their promoters. They've also mentioned the possibility of debt financing down the line, something called fit-out financing from NBFCs.
NBFCs, could you remind me what those are again?
Sure, they're non-banking financial companies. They offer various financial services, including this fit-out financing, which helps companies like Kontor cover those initial costs of setting up their, those stylish co-working spaces.
So they're exploring different avenues to fund their growth.
Hmm.
But we talked earlier about rent being a big expense, and they've got these big expansion plans. Doesn't that raise some concerns about their cash flow?
Yeah, it's a valid question. To handle that, they've implemented a deposit model. Basically, the deposits they get from clients often help offset the deposits they have to pay to landlords, so it helps them manage that cash flow.
So it's a delicate balance there with deposits coming in and out. Good to know they have a system in place. But even with a good financial strategy, there are always risks, right? What are some potential challenges Kontor might face?
Well, one of the biggest ones is competition. The co-working space market is getting really crowded, with both big players and new companies trying to get their share. Kontor needs to find ways to stand out.
It's a tough market out there. What are some of the ways they're trying to stay competitive?
Their premium affordable approach is definitely one way they differentiate themselves. They're also focused on building a strong community within their spaces, fostering those long-term relationships with clients.
So it's more than just providing a desk and Wi-Fi. It's about creating a sense of belonging. But have you considered the landlords? Could they become competitors themselves?
That's an interesting point. It's definitely a possibility. Landlords might decide to cut out the middleman and create their own co-working spaces. It's something Kontor needs to keep an eye on.
So competition is a constant pressure. But what about the bigger economic picture? How could an economic downturn potentially impact Kontor's business?
Well, co-working spaces tend to attract a lot of startups and small to medium enterprises, and they can be more vulnerable during an economic downturn. So, if there's a decrease in demand for office spaces, it could definitely affect Kontor's growth.
So their success is tied to a lot of different factors. The overall economy, the competitive landscape, even the actions of their landlords. Seems like a lot to juggle. Now, before we dive into those risks, there were a couple of interesting details in their earnings call that caught my attention.
Oh, yeah.
First off, they mentioned giving out a corporate loan, and it turns out it was to a related party. That always raises some flags, doesn't it?
It does raise questions about corporate governance for sure. They didn't give a lot of specifics, but investors will definitely want more transparency on that.
Agreed. And then there's that vehicle loan they mentioned, a whopping 60 lakh.
That's a big one. They didn't say what kind of car it was for, but it definitely sparks some curiosity.
It's a mystery. But sometimes those little details can tell you a lot about a company's culture and financial practices.
Yeah, for sure.
So we've got some potential corporate governance issues and a rather extravagant vehicle purchase to consider. It seems there's more to this story than meets the eye. Okay, but before we get too distracted by those little tidbits, let's take a step back and recap what we've learned about Kontor's business model and growth strategy so far.
Sounds good. Okay, so we've got a pretty good overview of what Kontor Space Limited is all about.
Yeah, their business model, their target audience, those ambitious growth plans.
Exactly. Now let's get into the nitty-gritty, the financials.
All right, time to crunch some numbers. What are the key figures we should be paying attention to?
Well, remember those two revenue streams we talked about? The per-seat fees from their co-working spaces, and then those lump sum monthly fees from the managed offices.
Yeah, those two main ways they make money. But how much are they actually bringing in? Spill the tea.
Their recent earnings call gave us some interesting insights there. They reported revenue of 6.38 crore for the second half of the fiscal year, with an EBITDA of 1.89 crore.
Okay, so the revenue's there, but what about the actual profit? What's their bottom line looking like after all the expenses?
Their profit after tax, or PAT, came in at 0.99 crore for that same period.
So they are making a profit, but honestly, those margins seem a little tight considering those big growth plans and the cost of operating in prime locations like BKC. Is that normal for this industry, or is there more to the story?
It's a good point. You got to remember, this is a company in a growth phase, and they're operating in a pretty competitive market. All those upfront costs, especially that rent, can definitely put a squeeze on their margins.
Right. That rent keeps coming back to bite them. But they said their BKC location is a big part of their revenue. What kind of numbers are we talking about there?
Well, those BKC seats are priced at a premium, remember, around $40,000 each, and their overall capacity utilization is currently over 85%. So it seems they're attracting clients who are willing to pay for that prime location.
85%. That's pretty impressive. BKC is definitely carrying its weight. But their expansion plans involve new markets, new spaces. How can they maintain or even improve their profitability while they're scaling up?
Well, they outlined a few key strategies in their earnings call. One big one is focusing on operational efficiency. They're looking at ways to streamline their processes, maybe using tech to cut down costs.
Makes sense. It's not just about increasing revenue, it's also about making sure your existing operations are as efficient as possible. What else are they doing?
Their anchor client strategy is also a key part of their plan for profitable expansion. Remember, they secure those large clients who commit to a big chunk of the space up front. It helps minimize the risk and creates a more predictable revenue stream as they open new locations.
Like we said before, it's like a safety net as they jump into those new markets. Pretty smart. But what about those corporate governance questions we talked about? Do those cast a shadow on their financial performance?
Yeah, that corporate loan to a related party is definitely something investors are going to be watching closely. They need to be more transparent about that to maintain investor confidence.
It creates a bit of uncertainty, for sure. So it seems like we've got a mixed bag here. They're generating revenue, they are profitable, and they have a solid plan for growth. But those cost pressures, especially that rent and the corporate governance concerns, are definitely factors to keep in mind.
Exactly. Investing is all about weighing the potential rewards against the potential risks.
Right. And that's where you come in, dear listener. We've given you the information, the insights, the numbers. Now it's your turn to analyze it all and decide what it means for Kontor Space's future.
Exactly. But before you make any decisions, we've got one more piece of the puzzle to explore. In our final segment, we're going to delve into Kontor Space's management team and their overall strategy. Who are the people at the helm? What's their vision? Are they the right team to navigate the challenges and seize the opportunities ahead?
It's the human element that's often forgotten in financial analysis. The people who are actually driving the company's success. I'm excited to learn more about them. We'll be back soon for that final piece of the puzzle. Stay tuned. All right, welcome back for the final part of our deep dive into Kontor Space Limited. We've covered a lot of ground, their business model, their financials, and even some interesting little details that popped up.
Yeah, it's been quite a ride. But like any good story, we need to look at the characters, the people behind the scenes. So for this last act, let's focus on the management team, the ones steering Kontor's ship.
I love that analogy, because at the end of the day, a company's success really depends on the leadership of its management team. Their vision, their experience, their ability to, lead. So who are the key players we need to know about?
Leading the charge is Ms. Kanan Kapoor, the managing director. She's been with Kontor since the very beginning back in 2018. She brings a ton of experience in real estate and finance.
Wow, so she's been there through it all, from the early days to this exciting growth phase they're in now. That's impressive. What's her leadership style like?
From what we've seen in their earnings calls and investor presentations, she comes across as very confident, very driven. She's clear about her vision for Kontor's future, putting a lot of emphasis on customer satisfaction, running things efficiently, and expanding strategically.
So she's got the big picture in mind, but also pays attention to the details. That's a good balance for any leader. Who else is on her team?
Another key figure is Mr. Kanak Mangal, the full-time director. He's the operations and project management guy, making sure all those new co-working spaces are delivered on time and within budget.
So he's keeping the trains running on time. It sounds like they've got a good mix of skills and experience on their team. But as we said before, leadership is not just about experience, it's about vision. What's their long-term strategy for Kontor Space? What do they see themselves in a few years?
They've made it clear that they're going for market dominance in the Indian co-working space. Their vision goes beyond just adding more desks. They want to expand geographically and offer a wider range of services.
So they're not just content with being another player. They want to be the leader, setting the trends. How are they planning to do that?
Well, they're exploring some new things, like revenue sharing agreements with landlords. That could really shake things up, potentially lowering their costs and giving them a competitive edge.
That's a smart move, being flexible and adapting to the changing market. But remember, they're not in this alone. They've got that tough competition and those corporate governance questions hanging over their heads. How does all of that impact their future outlook?
It's true. There are definitely challenges ahead. The competition is fierce, so they need to keep innovating to stay ahead. And they need to be transparent about those corporate governance issues, especially that loan to a related party, to maintain the trust of their investors.
So even with a good leadership team and a solid plan, there are still some potential roadblocks. What's your overall assessment of Kontor Space's leadership and their ability to handle all of this?
Well, I think they definitely have the potential to reach their goals. They understand the market, they're committed to growth, and they're willing to adapt. But they can't ignore those risks, and they need to be upfront about their financial dealings.
It's a balancing act for sure, weighing the potential rewards against the potential risks. But at the end of the day, dear listener, the decision is yours. We've presented the information, the insights, the different perspectives. Now it's your turn to evaluate everything and come to your own conclusions.
Exactly. That's what we want to do with these deep dives, give you the tools to be a smarter, more informed investor.
So as you think about Kontor Space and their future, remember to stay curious, ask those tough questions, and do your own research. The business world is always changing, and the best investors are the ones who stay informed and engaged.
And with that, we come to the end of our deep dive into the world of Kontor Space Limited. We hope you found it helpful, insightful, and maybe even a little bit fun.
Until next time, keep exploring, keep learning, and happy investing.